Traders, welcome back to another price action trading lesson. We're going to dive deeper into understanding price action. We're going to use price action rules to help us identify the right places on the chart to enter high probability setups. It's going to be a good lesson today. We have a lot of things we're going to cover. We're going to start with the analysis of the structure in front of us, and we can see it resembles basically a trading range, but it's not fully a trading range, is it? No, because we have series of high lows and high highs. So trading range that is tilted up. However, it is too early for me to treat this as a bullish trend, so I would need more confirmation. Let's see what's going to happen. I can witness the price action is staying above exponential moving average and keeps pushing higher. So okay, at this point I'm getting more information from the market, and it's clear we're evolving into a bullish channel. And as a price action trader, I know there's always a channel being present on the chart. There's always a trend line, a key entry point, and my goal is to find the right one. It is quite easy to find a good channel now because I already have 3 swing confirmation straight from the very beginning of this move. I'm going to copy and put it at the top. The channel right now is weak because we have significant bearish correction. It basically resembles a trend range tilted up. Now it is getting a little bit stronger now, but still fairly weak to medium channel. And notice the push here and push here. All the significant pushes start at the bottom of the correction phase. And I'm going to use price action rules to help us identify the right places where to buy. We're not going to be chasing the market. No, we want to buy where the correction phase ends. So even though we have a second entry long here, it is far from the EMA, right into these highs. I cannot go long. It worked, but it's okay. I'm not too bothered by this. And because I'm using price action counting technique to count the right entry, I'm going to reset the count here because we created new high. It's the highest high inside this uptrend. Every single time we create new high, I need to reset the count when I'm counting for the right entry. So we have a new high, first entry long, can we get a second entry long? First entry long is not high probability setup. We have a second entry long, but it's below EMA. I cannot go long below EMA. There's a big tail at the top. It didn't even trigger, but we're breaking above EMA. This is good. This is confirming the bullish trend. So what's going through my mind? I would like to see high-low confirmation setup of the two-legged pullback. Can we get a high-low confirmation setup? There is no break here, so no high-low. I cannot go long above this bar. Okay, now it's starting to get way too congested. Okay, I definitely cannot go long here. It's way too congested. I can see EMA flattening. So it's starting to go a little bit sideways. So what I'm going to do, I'm going to mark the bottom of this consolidation because they're starting to consolidate. So definitely I'm being patient now. It is too congested. Let's see what's going to happen. I'm thinking possibly I could go long at the bottom here, but it needs to form really nice. Okay, now we have confirmation of our channel. And more importantly, triple test. It's not really a high priority setup because it is a third entry long, but we have one bottom, double bottom, triple bottom. So this right here can be considered as triple test. The more bounces we have of the support, the better. You have 2 key entry points. The main trend line that we identified early is coming into play. Price action is telling us everything we need to know. Just understanding the pure price action and following the footprints. However, the channel can be drawn a little bit wider. It is a little bit stacked. The signal bar is nice, but I'm going to mark it more aggressive simply because you never know how many pushes low there's going to be. Ideally, you would like to see the push above EMA and high low, but because there's a triple test combined with the main key entry point, definitely a decent trader can take a chance. Can you get a high low above EMA? We cannot, and market continues working hard, so that's okay, but it's confirming that we are trading a bullish trend. Once again, notice, yeah, this is the reason I forgot to mention actually. This is a big selling point for this setup. I completely forgot. But we can see it resembles a visual two-legged pullback. That's the main reason why you can consider this, because you're going to combine the visual two-legged pullback with the triple test. So let's see what's going to happen. New count reset, new high, new count reset. We're correcting lower. The trend line is holding very nicely. Perfect bounce. We have a new low, first entry short. So I'm thinking about felt second entry short above EMA. Can we get it? And notice, now we have a felt second entry short, new low, first entry short, pullback, second entry short, failure if there's going to be a break above this bar right here. And it's once again bouncing off the key entry point. Now this is such a tiny break that when I was watching this live, you still expect new high. But because price action is still quite bullish, I actually widened the channel a little bit. Either way, you expect new high or the channel is in play. This is a great fault second entry short. I actually tried to take this setup myself, but I didn't get filled because you had to be really fast. But once again, it resembles a visual two-legged pullback, and notice even this key entry point, it's coming to play. Breakout, pullback. That's probably the reason why only first entry long here worked, because the breakout pullback is coming to play. So once again, you can see why understanding pure price action is all we need, because we wait and we use price action rules to correct the key entry point. Buying the bottom, it is a little bit counterintuitive because you always buy once you are seeing and observing the correction phase. So it looks like the market may be reversing, but it's exactly how market wants to trick you. It wants to make it look like it is reversing. So you pile on these shorts, you start selling directly into key entry point, but you need to trust price action rules. You need to buy low. It's a great setup. And because market keeps going higher like this, I'm gonna really widen this because the widened channel doesn't really look distorted at all. It still fits really great. You can see perfect channel fits nicely, a lot of confirmation. This is a very nice channel and very easy channel to find. I cannot go long now, first entry long. Now had there been a second entry long, which is not right here, you still cannot enter because we can see loss of momentum. You can see completely empty top of the channel. So had there been a second entry long, let's say here, you cannot go long here because it is too tiny, the correction, so much empty room here, loss of momentum. However, what I want to do is I want to draw the bottom of this trend range, and I'm going to draw once again consolidation. Let's see what's going to happen. Now there's even a possibility for wider channel like this. We have a small break and new extreme. You may be thinking, can I fade a breakout and go long because we expect new high? No, because there's a possibility there is a wider downtrend in play. You can see I started first my short-term channel right here, but there's actually a swing higher and I cannot ignore the swing higher. So because there's a possibility for wider downtrend, I cannot go long just yet. I want to see push above EMA and a first second entry short, because according to trend line rules, this uptrend needs to get new extreme. So can we get a push above EMA? We cannot. Downtrend is attempting to get new extreme. Okay, we're pushing above EMA and market keeps working to the upside. So now because we retraced too much of the downtrend, I'm going to mark new extreme. We actually had once again micro triple test. But problem is, we didn't fully create new extreme. Had we created break and new extreme, technically new low, sometimes more advanced trader with experience can take counter trend triple test like this. But because it's not fully creating new extreme, you really don't know if there's going to be additional push lower. Unfortunately, I cannot mark it even aggressive. It's just way too risky. We needed really a break and a new extreme. Without the break and technically new low that is lower than this low, it is way too aggressive. But had there been a break new low, you can actually consider. As of right now, I need to wait for price action to offer me what? Second entry long, because we expect new high. Perfect trend line rule. And we already created new extreme. So I'm going to mark it. You can see we're navigating the price action perfectly. So right now we created a break and new high, but this like to new extreme is extremely strong and there's a chance it's going to get a retest. So I'm not really looking for a failed second entry long, but I'm pausing all my longs. At this point, according to rules and according to market cycle, I expect correction or reversal. Let's see what's going to happen. Okay, another push up. This is interesting, more bullish, but okay. What's happening? Okay, I cannot go long just yet. Remember, we just had a new extreme and EMA is holding again. In fact, we are forming a small consolidation. Now it is tempting to go long here because we can see price action is failing to break below EMA, but it's just a little bit too sideways, breaking new extreme, tempting because the support is strong. That's what's going to happen, and this is important. What do you expect after new extreme? Correction or reversal? Correction means you expect at least break below EMA. None of this happened. Straight into continuation. So this can happen occasionally where the uptrend is going to continue and price action is telling you that it's going to continue. Because after break new high, you expect correction or reversal. We don't even have correction. We're not even below EMA. So this means that there's a brand new uptrend starting and I am able to draw a brand new uptrend like this. Okay, so hopefully it makes sense because normally you don't want to draw a brand new uptrend because you're playing the trend line rule. But because the correction is very tiny, EMA keeps holding and is still very bullish, you can see it allows you to draw a brand new channel. So one of those things where with experience you will actually develop the sense for price action like this and you will understand that the market is going to enter a brand new continuation phase. But because it is after new high of the first channel, you generally should be a little bit careful, more selective. So that doesn't mean you're going to start jumping the gun. Now I cannot go long in the second entry long above this bar, not a great bar. bearish body, especially since this is a secondary channel, not the main channel. This is a secondary channel, so you really want to make sure you follow the rules. So I would need high-low confirmation setup. Can you get it? We cannot. Okay, now I really expect high-low confirmation setup, expecting new high for this channel. It didn't form. I'm going to widen the channel. Even the widened channel created a break and a new extreme. Now we're pushing above EMA and we have a nice high-low. Break and new low indicated a downtrend played out. Push above EMA is confirming the buyer's activity in the market is resuming. Our secondary channel needs new high, and once again we're above EMA, confirming the resumption of the bullish momentum. And this right here is a great tier 1 signal bar. How big is it? Only 1.5 points. The risk is small. Great high probability setup. High low. Can we get a failed second entry short? Okay, we cannot. We have a failed second entry short here, which is quite tempting. Failed second entry short, but the problem is EMA didn't hold at first. Had it formed off EMA, you can go long. But we broke below EMA, so at this point I need to pause and wait for possible second entry long, counting from this high. And we have new high, first entry long, pullback, second entry long. Great high probability setup, second entry long. Small signal bar, EMA keeps holding. You can see higher low still. So this is confirming there's a bullish bias present. Uptrend is new high according to trendline rule. Everything makes sense. Perfect high probability setup. I can also see EMA flattening a little bit, so I can predict possible trend range just to make sure I have enough room to scalp out. I may want to use limit order. Let's see. The stop loss always goes one tick below the signal bar when I'm buying. You can see it almost stop you out, but you keep your stop loss one tick below the signal bar. This is where a mental fortitude comes into play as a trader. You have to develop a discipline to follow the rules and not break under pressure like this, because it is stressful to be in a trade what looks like a good setup and getting almost stopped out, surviving by one tick. And if you actually want to take a break even or break even and small change, you know, +1 +2, you can consider. I wouldn't blame you after such a retracement, just take break even, you know, and go take a breather. But go through the process while you're in a trade. If the analysis remains and it fits the rules, you hold it, your stop loss goes one tick below the signal bar, and that shows a great maturity as a trader if you're able to combat these demons, because these demons, they will try to talk you out of setups because, you know, it looks like you're about to get stopped out, but you're using price action structure that helps you protect your trade. This is why we don't monkey with the stops, we don't move it forward. There can be a pullback. Not every single trade is going to go higher straight like this. There can be pullback, there can be correction. You cannot monkey with the stops. You cannot, you know, move it higher if you are afraid you're risking too much. Either use limit order or skip the trade. You cannot put your stop loss in the middle of the bar. That's not how price action trading works. You're gonna get stopped out always on the noise, only to see it where you thought it was gonna go. Okay, and you were rewarded with a great trade. Now there's another second entry long, but I don't think you can go long into these highs. You know, there is some resistance. You can see all the shorts are piling in. This is why you always have to combine everything, because notice I'm zooming back slowly. The bias is bullish. So if you're a weak trader, if you're a developing trader, you focus on this, you see, oh, look at this resistance, I'm gonna sell. That doesn't mean anything because we traded up. We have a uptrend, needs new high, higher lows. So we expect price action to continue working higher. In fact, you can use the other side. Probably they are selling in such a bullish bias, and all of these stops are going to get taken out. This is why this bar is so big and such a momentum here, volatile spike, because all of these stops got taken out. Market eventually pulled back, but it's okay, we got our scalp. Now I was also eyeing possible channel like this, but problem is it just looks too rangy here. You know, we have a new high, second entry long. You cannot take this setup, bad bar, only first entry short. Second entry short failure, you cannot go long below EMA about this horrible doji. But problem is, it's just so rangy. I don't think this channel can justify us going long into these highs. So even though it worked for a scalp, actually a very significant move, I don't think we can go long because it is just so rangy. And now it's getting pretty much way too late. Everything in price action happens for a reason. Your ability to locate the correct channel will improve, because learning to draw channels is a skill like anything else. A lot of times you see on the internet people drawing channels all over the place and they claim trend lines don't work. Of course they don't work if you don't know that you're supposed to draw them tight, following the break in extreme, following the trend line rule, the market cycle. But today was quite easy for you to locate the correct channel, but it gets easier with time. It is a skill. You will develop a gut feeling for this to understand which channel is the best. Sometimes you will not draw it perfectly every single time. It's completely normal. It's just part of training. You cannot do everything perfect. Sometimes the price action is more difficult, but fairly straightforward day. Hopefully it makes sense that you're not really rushing too much to be buying high. Just wait for price action to pull back. It is counterintuitive. I know it is, because you're observing the correction and it looks like the market is about to reverse, but you're analyzing the bias, you're double checking the key entry point, you're following the price action rules, and you have to trust price action rules and do what common sense is telling you. You have to do the opposite. Okay, so just something to be aware of, because if you're a new trader, it is a little bit, you feel uneasy when you're trading like this, when you're always buying low, because your common sense forces you to buy once you see market proven to go higher. And once you see the correction, it may lure you into thinking the market is reversing. So it takes time, it takes few weeks, few months for you to actually click and think in a way of the market. But today was fairly straightforward. Break in extreme, market ended up reversing, decent second entry, sure, but it's already way too late. So I'm gonna wrap it up. I hope you had a good trading day. I'm gonna talk to you next time. Good luck with your trading.